Hello everyone, how's everyone doing? Today we're going to be doing another market review. We're going to be reviewing Wednesday 7, 2025, May. This was the day of the federal funds rate and the FOMC statement and the FOMC press conference news release. Following my previous two videos, this day was significant in the week's price action. So today's going to probably be a short video since I do not have much time. I have an AP exam tomorrow and I need to spend the rest of the day preparing for it. Again, information should not be considered as an offer or enticement to buy, sell, or trade. Here we have the daily Nasdaq chart. The latest candle is actually Thursday's candle, while the candle before that is Wednesday, May 7th. So this is Wednesday, May 8th. As you can see, the screenshot was taken at around 7 a.m. Eastern Time of May 8th. So when we're referring to May 7th, it's going to be this candle, and May 8th, this candle. So we opened here, and we traveled lower, touched into the sell side liquidity that we moved into previously one more time, and then from there we started to trade higher. The opening of the next day opened in the opening gap, and then that took us higher into the consequent encroachment of the balanced price range, and this is all before market open. Here we have the hourly chart. This is some of the anatomy of the day. See that price opened at midnight around 20,002 even. From there, price moved lower. We had a London accumulation. Price moved lower. We set an intermediate term high within this fair value gap here. Traveled lower, went beneath this low, and placed in a bigger wick than we did last time. And then from there we traveled higher, back up when it open, fair value gap, institutional order for entry draw. And then from there price traveled higher, back into the consequent approachment of the balanced price range, the one that, if you recall, we had spoken about previously, that once we see it breached, we would expect that price is not going to respect this as a gap, and we would start to trade higher, possibly meeting the daily volume imbalance, and then eventually the buy side liquidity. And also a point that I was making clear on my last two reviews was that these 2 days, Monday and Tuesday, are purely days to accumulate short orders for Wednesday to trigger a buy program towards delivering towards buy side liquidity. And that was all said before any of this happened. Here's the 1 minute chart. This candle here is 9:30 open. As 9:30 open, we had a little bit of slow price action where up until the first presentation gap was formed, where we went beneath it one time, ran these relatively lows here, and then from there price started to trade higher. We reclaimed the first potential fair value gap as a BISI, return back to it, touch it to the tick, and start slowly trading higher until we reach a discount with consequent encroachment, which is on the 1 hour. We turn back here, I'm pretty sure you can see it. So that's around this candle here's wick. If you drag that out, you have the consequent encroachment lined up just at that level, which is right around here. And notice when price moved over it, fades, touch the daily consequent encroachment premium, and then from there we drop beneath it, and then once we're beneath it, we start to use that level as a resistance level. Dropping us slower, we will have huge displacement around 11 a.m. Going back down through the first fair value gap, notice we embrace it, wick back into it, and start to trade lower. Following this, this is honestly just time distortion for the news release. It's lots of accumulation. I just put it in here to fill the gap between 11 a.m. to around 2 p.m. since it would get kind of confusing if I had just skipped from 11 a.m. to 2 p.m. So this is the price action. Nothing special, nothing really to note down or to pay attention to. This is just to keep you filled in. So here is where we arrive to 2 p.m., where we had the Federal Funds Rate and FOMC's meeting release. Then we had this candle here that triggered the movement that brought us lower beneath the sell-side liquidity. As you can see, we spent a bunch of time traveling beneath the sell-side liquidity. Something that I mentioned when we first ran the sell-side liquidity was that we did it very shallowly. We didn't do it with much displacement, or we didn't do it with, sorry, not displacement. We didn't accumulate beneath it, or we didn't spend time at it in order to accumulate the short orders beneath that low. Because obviously, as you know, beneath lows there are pending sell orders, and to accumulate more sell orders, you would spend time beneath this low as we do here. Since that was not fulfilled with Tuesday's price action, this was fulfilled within the Wednesday price action with the FOMC statement and Federal Funds Rate news release. And from there, notice after we move back up the sell-side liquidity, we use that level here as support. FOMC press conference news release starts here. We touch back into that, trade higher, move back into it, touch back into sell-side liquidity. Over time, find complete resistance off of it, and then from there we travel higher, back into the first fundamental value gap, and then from there we fail to breach that level to where we start to accumulate, move lower until the 3:15 to 3:45 Eastern Time PM macro sensitive time. From there, we get this big candle here that shoots higher, overtaking the first fundamental value gap, touching back into the first fundamental value gap of May 5 above midnight open. From there, we see that we find resistance off of the consequent approachment level. We drop lower, touch into this value gap here, through that, move back higher, use the consequent encroachment level of the first fundamental value gap, and then accumulate during the last hour. We have a new day opening. And then from there, we see that price runs higher, pushes through the first fundamental value gap. Notice these wicks here that stab back into it and use it as support, run back higher displacement for a value gap, slow movement higher, and then up until where the screenshot was taken at 7:11 a.m. Thank you all for watching. A short video today. Do not have much time. I'd love to go in depth, but I need to go now. And as always, forward willing, be safe.